What I think is a session that's going to be about one of the real key themes of the conference today, flexible renting, transforming the rental sector. So Brendan mentioned at the beginning that flexibility was a key issue. We're going to cover it in all its aspects. And with me, I've got 4 experts. I'm not an expert in any way. These guys are experts. 3 of us are wearing grey jackets, just to show you how flexible we are. So on the far side over there, I've got Ian Gibb from Node Living, COO and Global Head of Operations. Next to him, Tim Pankhurst from CBRE, Executive Director in charge of valuing for the PBSA, and lots of other things as well. Mary-Lee Carr, CEO of Under the Doormat Group and of Trusted Stays, and also chair of the Short-Term Accommodation Association. And finally, but by no means least, Guy Westlake, founder and chairman of Lavander, probably the best known short stay provider in the BTR sector. So here we go. Brendan mentioned that he wanted every panel to produce 3 challenges for the UKA over the next year. So we're going to focus our conversation around what I think are probably 3 interesting challenges. And they are, number 1, just report what is happening in flexible rentals globally. So get an understanding this is not a UK issue, this is a global phenomenon. 2, and Tim will be looking at you here, clear up the valuation vagueness.
That was me.
That's one way of clearing it up. And then finally, explain how to do it well. Explain how to make the best of the opportunities that do exist in flexible renting. So, there we go. And if there's time at the end, we'll come out for questions, but I've been given very strict instructions. We've got to finish on time, so I don't think I dare cross the guys and maximize your time. So let's start off the first question. What I'd really like the UKA to do over the next year is focus on and report about what's happening in flexible rental globally. But let's start off with some views. And Guy, can I turn to you and perhaps give us a view on what is happening in the US?
Okay, sure. So we have a business in the US and work with a lot of the multifamily operators and student accommodation operators over there. There's an adage that the US is always 10 years ahead of where we are in Europe. The truth is it's a fundamentally different market, right? And particularly at the moment, it's experiencing, I guess, it's being crunched on 2 ends of the spectrum. So you've got holders of long-term debt who are obviously feeling the pressure of rising interest rates. At the same time, in many markets, rents are coming down because of oversupply. So at both ends of the P&L, these multifamily operators are getting squeezed. So what we're seeing in the US is there's actually a big turn towards flexibility, flexible rentals, so short and medium-term rentals, corporate rentals, as a means of driving revenue where currently it just doesn't exist or it's being taken away from the pot. So I would say the US is in a position today where they're embracing flexibility much more strategically because it is a way of diversifying their businesses away from frankly, a rubbish market right now. So it is obviously things are not that great in Europe at the moment, but the dynamics there are very different. The second thing you've also got is you have genuinely scaled portfolios, right? We're talking about portfolios of 50,000, 100,000 plus units. And when you look at the ROI and the unit economics of shorter term renting and apply them across portfolios of that scale, the numbers are just devastatingly attractive, right? In a way that the portfolios in Europe are really, frankly, subscale, right, next to those. You've got 5, 10, 15,000 units. You're not really in the kind of, it's hard to sometimes make the economics stack up. So I just highlight the fact that the US market is very different, but they're doing some very exciting and innovative things. So we're seeing portfolios dedicate significant percentages of buildings, right, so in multifamily buildings, to short-term stays for a number of reasons. One is to actually diversify their revenue stream and make sure they've got more agile assets, all-weather assets. And then secondly, we're seeing them offer those units as amenities to long-term renters, right? So guest suites. So if you have families who come and stay, you can't accommodate them in your units, you can always rent units elsewhere. So there's that amenitization of space helps reinforce the long-term renting within the building and build value there. So there's kind of 2 axes through which value is being built. And there's all kind of flavors of ice cream within that, but I'll let somebody else speak.
I think on that, actually, there's a couple of interesting things. I think one is you've got the movement of Airbnb, also in the North American market, where they're doing deals now with buildings. I mean, I think certainly Guy and I would probably be in agreement that, you know, it would be strange if you were the owner or the operator of multifamily if you'd want to tie your whole destiny to Airbnb. And certainly there are plenty of other ways you can do it where Airbnb might be a component but would not be your only source of demand. But I think that is, of course, something that starts to change the dynamics, because what they're saying is, oh, well, look, if you're a renter, choose a building which allows you to do flexible rentals when you're not there, because it helps you afford the build to rent. And that, I think, is actually a really interesting thing, because one thing is to say 20% of your portfolio is dedicated to build to rent. The second thing is that you actually allow your tenants to rent it out when they're not there. And of course, there are different ways of doing that, from, you know, making sure that you choose your own operator and your own technology provider, so that you've got control over what's happening and you're not just letting tenants go and Airbnb it when they're halfway across the world. But that is also then an attractive selling point, potentially compared to a competitor, and can also drive longer term leases with the residents who have that flexibility. And of course, an incremental yield. So I think that's a new thing that is happening in the market that I don't think we should ignore, because let's be honest, when companies like Airbnb decide to do stuff, it can send waves through the market. And they're only doing it today in the US, but let's be honest, they test in the US and they roll out globally. So I think these things will be coming here, and there's an opportunity to get ahead of some of those things. I think the second thing that for me is really important is that we're in an inflationary world. That means costs are rising, and as you said, P&Ls are being squeezed. And what is good about the flexible rentals component is that it is not tied to long-term contracts. So every single day is priced differently. And as inflation comes in, so do prices rise. So the opportunity to capture that revenue inflation alongside the cost inflation is really helpful, particularly when you've got a portfolio of long-term leases, which are not very inflationary proof. So that's another factor that's driving people to look at flexible rentals as part of their strategy rather than just a void filler.
Can I just clear one thing up before we go on? What do we mean by flexible rentals? I mean, we use it very glibly as a term, but what is it in essence?
I mean, I would say anything less than 6 months as a contract period. And probably in some ways, the law defines it for us, because it's anything that wouldn't be, by its very nature, an AST.
Okay. Any other definitions? Okay, that's good. So Ian, Guy mentioned that Europe was just embarking on this journey. I know you're focused on Europe, so can you talk a bit about your experience, what's happening there?
Sure. Considering the quite strong headwinds in capital markets at the moment, Europe is incredibly buoyant. So we've got a pipeline of 5,000 beds secured across Europe. 2,500 of those are launching next year. And I think we're seeing two things in the overall markets. You're seeing opportunities, and then you're seeing convertible opportunities. And let me unpack both. The opportunities, some people have a concept or an idea about how to do something within a certain market in a European country. Some have an idea plus a piece of land, which is very helpful, and then others have land plus financing, and there's a real opportunity. So multiple conversations are going on, exploring this flexible market across Europe. But convertible opportunities are starting to come through really, really strongly now. So, and it's fascinating to see that in, let's take Spain, for example, where you have varying municipalities between Basque Country and Barcelona, and you've got different municipalities and city halls who have different ideas on how things should operate. Strong at the moment.
Okay. Again, Guy, the sense is that the UK is behind the curve on this. Why is that? Is it just tradition? We're always behind the game. Are there other things?
That's a really good question. I mean, it goes back to, I think, maybe one of the, I guess, sticking points around flexible rentals is the short-term component, right? And I think there has been a historic legacy of, it's a bit of a dirty word in the industry. It doesn't have the sticky revenue that you kind of see from long-term leases, and people may have tried it in the past. For whatever reason, it may or may not have worked, but that kind of has lived with them for a while. I think we're still struggling to get over that, and have taken a long time to get over that, even though I think empirically, the business case has now been very well proven. And there are many businesses now, business models coming forward, again, led largely by the US, but coming over here, interesting OpCo-PropCo models, which are creating an awful lot of value. The likes of Central, others, Placemaker, who are doing some really exciting things. And we'll see those come over here. But specifically, I think it also goes back to a lot of the time, short-term renting and flexibility only makes sense at a certain scale. And I think committing and allocating a critical mass of units and making this a strategic endeavor is a very big step to take. And I think a lot of the time in the UK specifically, we just don't have the bullishness, frankly, to take that massive leap forward because we don't have the liquidity in the units to play with. And I think there's a degree of hesitancy there, would be my guess.
Okay. Ian, you were nodding.
Yeah, I think just to build on Guy's point, the UK is engineered as a long-let market. So it's incredibly difficult to try and reverse engineer a short-let opportunity within a traditional long-let market. It's possible, but it takes thought, it takes consideration when you've got loan covenants, when you've got lender agreements, you've got head lease structures. So starting with the right concept in mind unlocks the potential of being able to put in flexible renting. But traditionally, it's a long-let business. It's 36-month ASTs. So it's quite difficult to build that back into your economic model. The economics stack up, but it's being able to put that into the operating structure sometimes causes some challenges. It's possible, but that I think has caused some of the friction with flexible renting.
Totally agree, yeah.
Well, and I think with that, what I think we are starting to see is people who are thinking strategically, who are getting planning permission right from the outset, working with their lenders and advisors to come up with a mixed model and getting that approved by the lenders and the underwriters from the outset. And then having that flexibility so that they can maximize the yield overall. And I think in a market where the hurdle rates are getting harder and harder to overcome, this is going to be critical to strategies to getting developments over the line. And that's where I think in our industry, there are a lot of companies that can help you do that and provide the data to show what can be delivered. And I think what's great about a lot of the valuers, and CBRE is one example, they have hospitality teams as well as resi teams. And so all the modeling already exists for these two components to coincide. And so there's no reason why we can't be getting these business cases over the line.
So, Tim, over to you. What is the problem? Is it valuers don't understand the models, or don't understand the business, or what?
Yeah, so I think it's not my fault, firstly. So I think, as Ian touched on, I think the UK has traditionally just been a 12-month AST or 36-month AST. And, this is what Guy was saying, short lets were kind of used to backfill voids, and therefore nobody's actually gone out and targeted it. I think we do see flexible living or short stays are part of the language, and I think if we look at the student accommodation, for example, we have 40-week term time lettings, and in order for operators to keep those weekly rents high, they can afford to do 40 weeks because they can backfill or create extra revenue by renting in summer. So I think that's something that's existed for a long, long time. We're very happy with that. The market's very happy with that. That's a very normalised approach. I think what we're seeing at the moment in build to rent, that hasn't been part of the agenda. That hasn't been the business plan at the start. Other sectors like co-living, I think, which is obviously quite new. We've only got 6,000 beds or so. That flexible living or range of tenancy lengths is part of the business plan. So people have allocated rooms to 3 months, 6 months, 9 months, 12 months, and they're seeing what happens. And I think what we are seeing is there's success, right? There is success in those schemes where that mix or that flexibility is creating a net line higher than the traditional 12-month AST. And also, to Mary's point, you can capture rental growth. That's a big thing we've seen with pretty epic rental growth right now. The student accommodation market has been tremendously attractive because you can reset your rent. So you've got a big step. Whereas unlocking it in build to rent, if you've got 36 months, for example, is more challenging. So that co-living market or that flexible market creates a more dynamic model where you can kind of track the market a little bit more.
Okay, so valuers understand it. Do investors understand it?
Well, again, I think it's what has come to the market. And, for us in valuation, the exam question is, what would this thing sell for, right? And it's kind of like, if you put it on the market, we can all say it's going to be great and you're going to get a massive high revenue, but unless you can prove it, investors won't pay for it. At the moment, I think you would always go back to, an investor would obviously underwrite sort of the base case, what we're all used to, which is sort of going to be 36 months. But if you're starting to get data, so if you're starting to allocate rooms and you can prove that, you don't have massive voids in between these flexible livings or because there's other options for it. You don't have to do it directly. You can get a company to kind of take on the risk for you. You say, this is my nice clean line of income and it's higher. I think people will start paying for it. But at the moment, it's not, with the exception of co-living.
There's no comps.
Yeah, there's no comps. I mean, it's a classic value question, isn't it?
There's actually
Got no comps, mate.
So to jump in, I think there's going to be something really exciting happening in the next 12 to 18 months. So some of the names that I mentioned, so Central in the US, Placemaker, they own the assets. They're not leasing. They have a propco that owns the assets, and they have an opco that operates them as either a short, medium, or long-term rentals, furnished or unfurnished. It's genuine sort of flexible living in its truest form. And actually, these assets are going to sell. They're going to sell their first assets in the next year or year or two. And as soon as that happens, as soon as we see the cap rates that are applied, then there's this all-important, but it's going to be super exciting, actually. And I think that will unlock the asset class, because I firmly believe it will become an asset class.
Yeah, I totally agree, actually, because I think at the moment in the UK, historically, has been, I'm an investor, I invest in student, I don't look at anything else, I invest in build to rent, and that's it. Or I invest in co-living, and the three shall never meet. And I think, we're starting to see a blend of living, and I think, when you look at the student hotel, which was over in Europe, fantastic model, occupationally brilliant, and they had a mix of short stays, student and hotel, all blended into one. Fantastic model. But investors were a bit like, well, I invest in hotels, not student. Student people are like, I don't invest in hotels, I do student. And, and I think that was the trouble. But GIC have made quite a statement by buying that. That's seriously grown up capital. And I think, all the signs are that is spreading here. But, how we're aligning ourselves, it's living, and it will just be one living sector. And I think there'll be some certain nuances, but I'm exactly with you, Guy. I think it will really blend together.
But I think what is also interesting is more and more there are data sets. And, I'm sure you've got examples, we've got examples. And one of the things that we've been able to do with some of the assets that we've managed is also use STR data, which is hospitality industry data. It's benchmarking, it's independent third party. And what we've seen, for example, in the Cadogan portfolio, is that the asset we manage is outperforming other assets in the portfolio and outperforming the comp set of other hotels in the area. So we do have these comp sets. They do exist. And I think what we need to be doing is more and more sharing this data at an industry level, wherever we can, partnering and working with the likes of STR and so forth, so that as valuers, you have access to information, we can set benchmarks, and we can track them to be able to prove the performance capability. Because if we're able to do that, what we know and what we see from the examples we have, it is outperforming even when you take into account higher costs and even when you take into account void periods. And that's pretty powerful when you really start to see this data. In one customer example we've got, studios and one beds outperformed on a net basis, like for like, the long-term portfolio by 22%, and 2 and 3 beds outperformed by 40+%. That's a huge incremental yield. And that's the kind of stuff we now have data for. We just need to make that data more accessible.
You should increase your fee. but it's true, and I think at the moment, what we're seeing, when it's only a little bit, people sort of just default to the norm. But when you're 20%, to Nick Guy's phrase, that's devastatingly attractive.
Yeah.
So,
Is there a role for the UKA in this, do you think, in terms of bringing the data together, sharing it, publicising case studies and things? Or will it happen anyway, Guy?
I think there's always a role for the UKA. I mean, I think just banging the drum. I don't know whether it should be the UK's role in actually collating the data. I think it's almost better that's done through a specialist third party. But I think bringing the right people together around the table is very much where you can help, where we can help.
Yeah, and I think it would be interesting to engage with STR, for example, and see, again, an independent third party, can they support the UKA to help bring this together? So I think that's an opportunity. I think the other thing that I would love to see is a roundtable where we bring together the lenders, the advisors, and some of the operators to really kind of debunk some of the myths and get some of the thinking on the table so that we can, produce some best practice, show what works, case studies and things like that. And I think that's where the UKA best practice guide, should also have some information to help people. But I think in some ways that might start with something like a round table where you bring people together and really have a session to discuss the hard stuff.
Good. I can't see Brendan in the room here, but I'm sure somebody's taking notes for him. Ian, you talked in our earlier discussion about the need to understand gross to net and how that's specific in this market. Do you want to talk a bit about that too?
Yeah, I think it's critical because from a valuer's perspective, from an operator's perspective, there's lots of standard industry terminology, which I think in order for us to professionalize and to make this sector grow and really be treated as a serious asset class, I think this is where understanding what goes into gross to net, what is NOI, and then so from an OpCo, PropCo level, so depending on how you structure your organization and how you apportion your costs, to the operating platform within the PropCo or sitting within the OpCo, I think is key. Because then I think you start to unpick some of the understanding around what good performance looks like because you're able to benchmark on an apples for apples basis rather than an assumption. And I think this is where the sector needs this, the more data that can be shared. But that takes all operators, us included, to want to contribute to that, anonymise it either through the UKAA or into a third party. But I think the more we can share, the more we can evolve to help this sector perform, particularly within the UK.
Okay, so we've been talking about good practice here. For the people in the audience who are maybe not yet engaged in the flexible rental sector, what are the 3 or 4 key things they really should do to make a success of it, and perhaps, Tim, to avoid some of the mistakes that you've experienced in the past? Well, I'm sure everyone else on the table has experienced in the past as well.
Yeah, I think what Dave's alluding to is a story that I can't quite say in full. But what we
Maybe
have
drinks
seen,
later.
yeah, maybe drinks later. But I think what we have seen certainly in student space, where even though flexible rentals and short stays in summer is kind of the norm, we have seen people that have gone and got consent for summer to open up the user clause. And they've tried to do that directly, but I think there's been some operators that have been a bit burnt by that, so it's very hard to control and manage, and they've had things like stag do's or inadvertently creating a 1,000-bed brothel, but there's some problems around managing that kind of behaviours and stuff that's kind of just not worth the squeeze, as it were, because it's too much hassle to create very little upside. But in the student space, you're only sort of talking about how to maximise 10 or 12 weeks, so it's a challenge. So I think managing it professionally, which isn't the core business of a student operator or many build-to-rent operators, getting that short stay, getting a professional, and I think there's a real gap in the market for that. Not gap, if people are there. But I think that's the real bit where I think we'll start to see some stuff coming forwards.
Well, and I think on that, obviously, as chair of the Short-Term Accommodation Association, we've got lots of member companies that do it professionally. We have industry accreditation through Quality in Tourism. And so I think that is something which has come a long way. And I think, you know, if you are thinking about an operator or a technology provider or whoever you need to partner with to access the demand and also to operate it, making sure that, you know, they are reputable, they're part of the, you know, the association, but also that they've got great examples of where they've worked with others. I think that now exists, and there are really solid operators and technology providers that can help with that. I think the other thing that is important, and you know, we have to always say as an industry, is kind of the elephant in the room, which is often people are just afraid of the Airbnb challenge. And I think as an industry, we've come a long way, that it is not just about Airbnb. And when we talk about flexible rentals, often that's because, you know, short-term rentals, everybody just thinks, oh, it's just Airbnb properties. And it's not. I think any of the professional companies in our sector are working, of course, with the major OTAs like Airbnb, Booking.com, Expedia, et cetera. But you also have the likes of Marriott Homes and Villas in the market, and certain companies can get you onto platforms like Marriott Homes and Villas. And obviously, I represent Trusted Stays, where we've brought together both for UKA and the Short-Term Accommodation Association a connection into the global distribution system and the corporate world, because everybody wants to access corporate bookings, but it's a very fragmented space. You don't want to have to go and sign contracts with every different corporate on your own, because any individual you know, development isn't big enough to do it. And so we've done that at an industry level so that everyone across the industry can access it through one single channel. And I think these are the things that are fundamentally shifting what flexible rentals means, the types of clients you can access, and the professionalism that you need to do it properly.
Can I just pick up on one thing? So on Tim's point, which is, you know, there's been a lot of people who tried to do this, they brought it in-house, and it's, you know, failed for whatever reason, or it's been very costly, right? So that everyone's aware, that there are basically three ways of doing this. You can either fully outsource it to a third party, you can either do it all yourself in-house and kind of get the technology to do it, or you can do a kind of partially outsourced kind of operational support model. And what we see in the industry is actually, as this becomes more strategic, and for example, student is a classic example of where it is highly strategic because the optimization is there, the business case is there. We see a lot of demand for people to start, you know, softly, outsource it, then bring it in-house, and then eventually, over a period of years, you know, do it yourself and have the technology to do so. But it is breadcrumbs, you know, it's like going on the journey. But it's important that people realize that there is lots of ways to skin a cat, so to speak.
I think that's right. The sense it is not a single model. There are lots of models. Mm-hmm. There are lots of markets, and Ian, lots of different customers. And I think an understanding of customers seems to be crucial. And I wonder if you could talk to that a bit.
Yeah, I think it's probably the most fundamental point, I think, for an operating platform is know your customer. The total addressable audience, what we're finding across European markets, is vast. You would assume it's Gen Z millennials, creatives, digital nomads, but it goes far beyond that into senior couples with pets. People who have, you know, different life-saving circumstances are looking for flexibility and a good quality product. So if you get your value proposition right, because you understand intimately your customer and what's important to them, you're able to serve it to them at the right quality, and obviously for the right price, then you've got a real recipe to be able to stick. But there isn't a vanilla for this. It's what suits your market, it's what suits your customer type, and it's where you want to play in a totally broad market. So I think that's one thing if you're looking to get into or explore this. I think the second thing that I'd just touch on, if you're looking to reverse engineer this into a long-let business, it can be done. So if you really engage with your local councils and start to understand their drivers, you know, most local councils are worried about this happening on their watch. So to professionalize this and do this in a way which is structured and has an element of control, you can achieve a certificate of lawfulness, which is almost an exception. It's an abstinence from your planning application, which gives you permission to explore a different part of rental sectors. So that can be done. But then you've got to think about how you're going to put this into your customer proposition, because your customers will know what's going on. So group the units together so that it feels like you've got this community within a community. But more importantly, think about your existing residents or existing occupiers. What's in it for them? Because they'll see what's going on. And this is where I think you've got an opportunity to engage your existing customer base, offer value to them, but also unlock real potential to drive high levels of rents, good levels of return, but also look after your existing customer base.
I'll open up for questions in a minute. We've got, what, 3 or 4 minutes left. But Guy, one of the things we haven't talked about is social value. And I remember you, when we were talking earlier about this session, about how you found been able to generate social value through flexible renting, which is perhaps not necessarily thought about in some of the propositions you're working with in the States.
Yeah, I mean, the social element is actually very, very important. So particularly when you're going through planning applications, and again, if you're baking this into your strategy early enough, you know, pre-planning, and you've got a really clear vision of where you want to go, that's how you make the most of it, going to Ian's point earlier. I mean, we've seen councils be really quite open-minded, right, when they understand the totality of the business case. Totality of the business case is what these people are doing when they're in situ, not just the fact that you're renting on a short-term basis, but if you can look at the spend that these guys are driving when they're in situ into local businesses. We've got great case studies now of university towns where, you know, many of these cities are, there's basically an exodus over the summer when the students leave. Businesses literally shutting up shop, right? So parts of Bristol, parts of Leicester, you know, there's businesses stop at that certain time of year. But we know if you've got people coming into student accommodation and spending money, they're then able to continue over the summer. So there's a lot of stuff here that needs to be unpacked and put forward in the application. I think we're very bad as an industry, if I could be critical of us, of telling that story. Marily's doing a much better job of it than the rest of us. But it is so important to raise awareness of that fact. And it does unlock a lot of doors.
Okay, that's great, Guy, and I think that's a great point to just almost wind up on. But are there any quick questions that anyone in the audience would like to ask before we finish? Okay, well, that's great. Can I say thank you to Guy, thank you, Marily, thank you, Tim, thank you, Ian, thank you for joining us. Do go out and tell the tale, the story about flexible rentals. We really are transforming the rental sector, but only with your help. So thank you very much.